For those of you who are following up this panel virtually, you can use Hoover to ask the audience any question, and we have Raleigh who will pick up your questions, and then we'll share it with the panelists later on. So if you are following up this panel virtually, type your question on Hoover app. We'll pick it up at the end of this summit. Thank you very much, our esteemed panelists. We're very much happy to have you here for the DeFi and Future of Money panel. For a quick introduction, I am one of the co-organizers of this Africa Fintech Summit and also Managing Director of Ibex Frontier, a Pan-African investment advisory firm. I'm accompanied by Chris Maurice, who is the CEO and founder of Yellow Card Financial, Ronit Ghose, who is the Global Head of Banking, Fintech and Digital Asset at Citi Global Insights, and Johannesen, who is the founder and CEO of Flash. So we will ask each panelist to do the introduction, to introduce themselves first. So we'll start with Johannesen.
So hello everybody, and thanks for having me here. So my name is Johannesen. I'm the CEO founder of Flash. Flash is an innovative fintech company that started approximately 4 years ago in Democratic Republic of Congo. Currently, we expand our operations into Congo, Brazzaville, Ivory Coast, and most recently now we're starting in Angola. Our core business started with remittance, and we became very rapidly a market leader on remittance in DRC and in Congo, Brazzaville. And from that base, we wanted to enhance financial inclusion in the region. So we create some wallets that allow our agents to distribute multiple financial services and non-financial services. So currently, we have approximately 4,000 agents that uses our aggregation app and marketplace for distribution. And we have a rapid growth. Currently, around $600 million are going since the last 12 months into our rails. And we see this as a great opportunity for underbanked to have access to financial services and non-financial services. So this is what we do.
Thank you very much, Jonathan. Ronit, over to you, please.
Great, thank you. And thanks for having me at the panel. So my name is Ronit. I work for an institution called Citi Global Insights. That's the research thought leadership unit that Citi, the bank, has. I'm not here representing the bank, just in case you get questions about why or how banks adjust to DeFi. So I'm an independent analyst on the bank platform. What I do is, and this is all publicly available, you could just put my name into Google or a search engine of your choice, and you can see some of the materials we've written about DeFi, crypto, the future of finance. It's all publicly available, and it's done in a collaborative way. So if you just put my name into the search engine, it'll pop up, Future of Money. I also have an advisory role in some Africa and Middle East focused companies with friends of mine. So in terms of seed and early stage investing, there are a couple of VCs and some fintechs and startups that I sit on advisory boards of. Thank you very much for having me. I look forward to this conversation.
Thank you very much, Ron. Very much appreciated. Chris, over to you, please.
Yes, thank you, sir. Hi, everybody. I am Chris. I am one of the founders of Yellow Card. We are the largest crypto exchange on the continent, operating in 12 countries right now and expanding Pan-African, making it easy for anybody to be able to buy, sell crypto, Bitcoin, Ethereum, Tether, all that fun stuff.
Thank you very much, Chris. And you haven't mentioned that as being a humble person, but congratulations for your recent fundraiser as well. So that's also one of the good news about your journey so far. So we'll start with the general question, maybe. What we hear this DeFi, decentralized finance, especially from the Africa continent point of view. So maybe for Chris and Ronit, what is DeFi, and what is the difference between the legacy fintech and other digital infrastructure? And what makes something centralized or decentralized? I know it may be a very basic question, but we need to get started with that.
Sure. How long do you have for that question?
2 minutes.
2 minutes, okay. So the really simple way to think about it is traditional financial institutions are the institutions we have today. So banks, brokerage firms, stock exchanges, central bank. Basically, the authority, the trust in those institutions come from regulation. So if you have a bank or a broker-dealer, it has a license. It goes through a licensing process, and that gives authority of the state behind the institution, just like money. The money you have in your pocket, or if you don't have banknotes anymore, the money you have in your digital wallet, the authority, the value comes from fiat, the state backing. Decentralized finance, by contrast, doesn't have any state backing or any centralized institution backing it. It's basically blockchain-based, ideally permissionless blockchain-based. So it is solving for trust based on code. It's not solving for trust based on legal code. It's solving for trust based on software code. And I'll just leave it at that. Maybe others want to add to that definition.
Thank you.
Yeah, I think the easiest way to think about it is that if somebody can stop you from using your money, if somebody can prevent you from moving your money from point A to point B, if you have to ask anybody permission, be it your banker, be it your online banking platform, to move your money, then it's centralized. And there is somebody that is sitting in control of the funds or whatever you have on that platform, and somebody else is in control of your money, right? The contrast to that would be DeFi, would be decentralization, where when you control your own wallet, when you control your own private keys, then you are in complete control of your money. Nobody can tell you not to move it. Nobody can tell you how to move it. And that would be the big difference, right? So banks are centralized. You have to ask them permission to move your money, right? Sometimes they say no, especially in certain countries across the continent. Whereas crypto, DeFi, those type of platforms, you don't have to ask permission. You're able to move it freely.
Thank you so much. That sets the agenda very well. So now we understand DeFi. In our African fintechs expanding globally, there was one point mentioned by Flutterwave. We don't want to see ourselves as a payment company because they are enabling the ecosystem. So when we're talking about DeFi, we're not just talking about DeFi, it's enabling other sectors. So my next question to you is, what do you see as the top 3 sectors that would benefit or that would be transformed by DeFi? That is one. And for an average African, for an average person, how does DeFi benefit and what problems does it solve? So maybe we can start with Johannesen and then we can go by 10.
Yes, I think I will talk more in the area, in the industry which Flash is evolving. And I believe it's one of the paramount opportunities for DeFi to flourish. It's in remittance, because currently we have around $108 billion of remittance that flows into Africa, and the average cost of remittance is around 8.2%. And we have a sustainable goal to reach of 3%. That's the goal. And currently, this is mainly if you put all the different intermediaries that have to go from one point A to point B from a remittance perspective. You have, of course, SWIFT rails, banking rails, intermediary rails, this adding to the cost of remittance. So if we could use stable coins just for settlement already between MTOs, that will lower down the cost of remittance. That could benefit also the final beneficiary, which is the African continent. So just imagine if we could reduce of half the cost. That could be approximately 4 billion every year that could go into the African economy. So I think that could be a good winning case for DeFi on remittance.
Very good point. Thank you so much. $100 billion annual remittance, 8% fee. That's huge. Thank you so much. Ronit?
So the main use cases of DeFi globally right now is in the name. It's DeFi, financial services. So a lot of it is a little bit kind of self-referential. So they're automated market makers, there's lending, there's borrowing, but it's very much sort of the financial equivalent of Inside Beltway. It's very much sort of self-referential. The remittance use case is a really interesting one. I don't know if it's specifically DeFi, we could say more broadly crypto, because what DeFi or more broadly crypto adds to Africa and the Middle East and other parts of the world, such as Central America or parts of South Asia and Southeast Asia, is it's not about DeFi versus TradFi. Because if you're sitting in the UK or you're sitting in, say, Canada or Sweden, where the TradFi system works well, if you're sitting in Sweden, payments work, both intra and in between cross-border. If you're sitting in Honduras or Eswatini or Laos, it's not about DeFi versus TradFi, it's about DeFi versus NoFi. It's about, there isn't actually, and that's why it's so powerful. And you can say it's DeFi, it's crypto. I mean, there are all kinds of dodgy statistics on this front, but if you look at, for example, MetaMask users, one of the biggest users of MetaMask, the wallet for accessing DeFi, is Nigeria. There's all kinds of very sketchy stats, though, on Twitter about just how many Africans or how many Nigerians are actually crypto holders. They're generally massively exaggerated. But there's smoke under the fire, which is that there is a real use case. And remittances is one use case. One is just money, so it's in the name DeFi. The other one is play, gaming. So obviously over the summer you've all heard of the play-to-earn phenomenon. So I'm thinking of Axie Infinity and Vietnam and Philippines. But gaming is huge in parts of Africa. Well, how about turning gaming from just being about me, the gamer, giving you, the centralized app, lots of money, to me, the gamer, owning a stake in the game, whether it's a car in the racing game or whatever. So that would be a really interesting way of, because the promise of DeFi, right, is about ownership and empowerment. So you can almost flip it around from seeing gaming or gambling as sort of a gouging and exploitative, to play being fun, but also as a chance to own a share of the fun. And that's where I see an opportunity for the continent, as well as obviously remittances.
Thank you so much. Chris, over to you.
Yeah, I think, both of them are completely correct in terms of remittances and payments. I think specifically in terms of how does the continent benefit from it, something that people don't usually recognize, and something that we try to tell to any of the beautiful regulators in the audience that we love so much, is that with crypto and with DeFi, especially on the payment side, it actually helps countries keep money in the country. When these countries look at their financial stats, right, one of the most important thing is dollars. What are your foreign reserves as a country, right? And up until realistically 18 months ago, right, the way that any sort of export, any sort of import, right, the way that a lot of these economies have been running is I have $10,000 worth of local currency. I'm a guy that sells shoes on the side of the road. I need to send that money to India, right, to get those shoes in. So I bring that to the bank. The bank goes to the central bank. They say I need 10,000 US dollars to leave the country. It needs to go to India. Right now, that same guy is buying Bitcoin, sending it to India, right? $10,000 has stayed in the country in USD, in foreign reserves as a result of that, right? And that's something that I think has been very undervalued in terms of what DeFi and what some of these alternative payment methods are actually bringing to the continent. Is that it's helping keep hard currency here while still allowing the economy to function and allowing imports to actually flow a little bit more smoothly.
And
thank you.
Maybe as an extension of that point, if I could jump in, as well as keeping hard dollars in wherever, in Nigeria, wherever, you're integrating cross-border without losing the hard dollars. You're integrating cross-border as your TAM as a local entrepreneur in Egypt or Nigeria or Kenya is expanding dramatically. Suddenly you've got a chance that your TAM isn't just Egypt. Your TAM is the whole continent. And we know how difficult it is to move money, right? In just intra-Africa. So can you imagine if it's a bit like flying, right? It's like money moves like, oftentimes you have to fly by Europe to get to another part of Africa. It's the same with money. So that your TAM explodes. And that's the thing, if you're a policymaker, you've got to think about is, and I can have global businesses based here, wherever here happens to be.
Thank you so much. So remittance, play, game, and Forex, that's a huge beneficiary sectors in Africa. Coming back to you, Chris, I don't think this story is well narrated and most probably articulated to the regulators that actually this DeFi is actually helping the countries retain their hard-earned foreign currency. It's not really taking the money out of the country on back channels. Obviously, there are a lot of issues, and there has to be some sort of security arrangements. But do you think that that story is like well articulated, or what can be done by industries and innovators like yourself, not only on a one-to-one meeting with regulators, but just educating the whole continent how it's helping the foreign reserve of countries?
Yeah, I mean, the reality is the average guy on the street doesn't care about the foreign reserves, right? Right. I mean, other than the impact that it has on the currency that he or she is living in, your average person doesn't care how much money the government has, right? As far as they're concerned, they have too much money, right? So, and so for us, we do find it more of a thing that we're trying to explain to regulators, right? When it comes to sort of your average person, though, the thing is there is certainly an education gap in terms of how does crypto work, right? How does some of this technology work? But what we found is that that education gap closes very quickly because people are resourceful, right? I mean, people will find a way to solve their problems. And the thing is that this industry and just this technology is solving so many different problems that people are willing to spend the time to learn about it, like to understand how to use it and to make it happen.
Fantastic, thank you very much. So Ronit mentioned that about the statistics coming out about Africa and crypto and DeFi. Obviously, we have to be careful because some statistics are a bit exaggerated. But I just wanna mention one report with that disclosure. Bitcoin Magazine mentioned that Africa is the top third growing market for crypto. And the magazine actually reported a research done by Chainalysis, which showed that the market in Africa from July 2020 to mid-2021 increased by $105 billion, not million, but $1 billion. Let's assume that the figure may not be accurate, but it just shows you where Africa is heading when it comes to cryptocurrency acquisition. What is driving that growth? Maybe Chris, if you can just give us some insight, and Ronit and Johannesen, feel free to add.
Yeah, so I know people like to talk about some of the numbers being exaggerated. I would stick my neck out to say that number is probably low, and I would say that it's probably double that. I think that the growth on the continent has been completely unparalleled. And I mean, just to dive a little bit deeper, so that was a report by Chainalysis, and essentially it listed 6 African countries in the top 20, right, for countries in the world in terms of number of people using crypto, in terms of amount of crypto, right, flowing through these countries. And yeah, I mean, the growth has been absolutely tremendous, right, especially in countries like Nigeria. I mean, I think that report specifically also into something that we've seen just within the industry outside of the continent is that it has been very good at starting to attract people into looking into Africa as a legitimate place to do business, right? I think unfortunately for a lot of people, especially Americans, that was probably the first time that they heard of those 6 African countries, right? And so, now that these reports are coming out, right? Now that especially in the crypto space, in this industry, Africa is becoming such a hot market and such a massive market. You're seeing a lot more companies that are looking to the continent, right? Looking to invest, right? Looking to open offices here. We've talked to several that have started hiring developers, right, just to have a presence on the continent. And so I think that in terms of what's driving the growth, it's everything that we talked about, right? It's solving practical problems for people, right? And people need the technology. And so people are going to find a way to access and to use the technology. And again, I don't want to understate the value that it actually brings to the continent in terms of foreign investment, right? In terms of money flowing in, staying in, right? In terms of job opportunities, there's quite a lot that's coming from the industry into Africa right now.
Fantastic. Thank you very much. Do you have any additional comments?
Yes, I would like also to state that in Africa, I think we are specialists in leapfrogging. And we see that with mobile money penetration or also mobile phones as it is. And I think that Africans has always had too many barriers to access many essential things. And today this type of technology is enable Africans, to really be free to trade, be free to send money from one country to another, from one person to a person. So I believe that these numbers are showing exactly what the Africans need and what they want to embrace this technology. And also we're having a very young population that can embrace these technologies quite faster. So that's what I would like to add.
Thank you.
I definitely echo that last point, because when you have the median age of many of these countries in the high teens or 20s, and the same plays out in that chain analysis report. I think the top countries were like, can't remember the exact order, but Vietnam, India, Pakistan, and then, as you said, a lot of African countries. There's a commonality, which is my point earlier about it's not TradFi versus DeFi in these countries. It's NoFi versus DeFi. This is giving something that's a real big positive. But then there's a demographic. I was talking to an Indonesian crypto exchange CEO the other day for an event I was hosting, and half his clients were between 18 and 24, and the other half were probably 24 to 31 or something. Right? Whereas, if you're sitting in London or New York, your median age is 45, right? It's a whole different conversation you're having. So I think demographics matter, but the biggest one is it's fixing real problems. The one where I said some of the numbers are dodgy, I didn't mean about the chain analysis, the volumes. I meant some of the percentages of. You'll see studies that say X% of Nigerians have crypto, and they're normally huge numbers, sometimes even higher than smartphone numbers. So I'm completely with you guys in terms of like, there's a real problem being solved. Hype sometimes gets a little bit carried away. Like, you just if you see a number like that, just message someone in that country and say, is this right? Because I saw this article about, I messaged 3 Nigerian good friends, and they were like, dude, there's no chance that can be right. I mean, yeah. So just the little caveat about some of the hype around it, but it's fun.
Yeah. Thank you so much, very much appreciated. The whole concept of DeFi being decentralized and no one is controlling also, raises a few eyebrows within the regulatory and compliance sectors. And no wonder that we actually are having this DeFi section while the regulators are actually having another meeting downstairs. But from from the society good point of view, and also just assuring the regulators that yes, DeFi can work it out about crime control, compliance, and all of that. So what are the current policy and regulatory challenges facing DeFi, and what can be done? What elements need to be added to make DeFi regulation and regulatory framework both user-friendly, but also assuring not only the regulators but the society that is not this, a crime scene, so to speak. And do you see any global and global administration, enforcement, coordination working together? Any comment about that? Anyone can pick up.
Okay, if I can share my experience on that. It's been a real struggle with certain central regulators to first understand what we're talking about. And we've seen bodies of regulations with people with a lot of seniority, but with a lot of lack on what is this new revolution doing for countries or for financial institutions. So I think the first thing we have to do with the regulators is that they understand what's the innovation. So we need to basically first educate our regulator, and this is where it takes more time. And secondly, there's been a lack also of education in the public and the first experience with crypto. So we've seen, for example, in Democratic Republic of Congo, a lot of people that have been scammed through buying crypto as an investment. And this has pushed the regulator to say, no, crypto is banned, crypto is no good, and crypto will not exist here. And then we've seen other places where the regulator is more than in the learning, higher in the learning curve, and even adopting e-currency for like we're having now with the e-naira. And I also had the chance to try to educate our regulator on the opportunities on creating a national e-currency. So I believe that there is a lot of skepticism, and there's a lot of need for sharing knowledge, and this is what we are currently trying to do with our regulators.
Fantastic, thank you. Ronit, please.
And maybe just to sort of echo that point, that a lot of this is just, we're very early as far as the regulators are concerned. So remember I said about age, if half the clients of that Indonesian company I mentioned, which is the largest Indonesian crypto exchange, are between 18 and 24, you can be sure that none of the regulators are between 18 and 24, right? They're probably even older than me, so it's like they're in their 50s or older. So there's this huge learning process that's happening, and it's happening across the world. Now, some regulators will take the view, we're just going to ban it. And there are two types of countries who will just say, initially we're just going to ban it. One is any country that's based on a high degree of centralization, central political control. Philosophically, this is just, my friends on the panel can go and pitch, but they'll be like, they'll get even more scared when you go and tell them about the benefits of, because they're like, no, we're the guys in control, not you and your kids. No, we're in control. So any political institution system that's very centralized will struggle with this, and we can't pretend it won't. The other one that'll initially struggle, but then could get around it, is capital inflow reliant countries that have capital controls. Because if you have capital controls, you'll immediately go ban it. And then you have to go through the education process saying, look, you can create money here, you can create wealth here, you can create entrepreneurs here, you can create a whole ecosystem that'll employ people here in your country with a global TAM. We are in a process of education. I mean, I know personally, my friends and I, we talk a lot to regulators all the time at very senior levels. And many regulators are open and willing to have that dialogue. It's not just going to be ban it. There's a lot of behind-the-scenes discussions happening. I'm based in Dubai, in the UAE, and it's just happened in the last 12 months that both Abu Dhabi and Dubai now have regulatory regimes that didn't exist before. It just happened. I mean, Bahrain happened a few years ago, so it's happening. And so initially it'll happen in sort of city-states or financial centers, Singapore, Bahrain, Dubai, Abu Dhabi, and others. But we'll see it soon, I think, in the US and India as well. Big national economies that are relatively pluralistic and open systems. They won't ban it, but it'll take a long time for the framework, whether it's the SEC versus the CFTC and the equivalents in India, it'll take time, but eventually it'll be regulated, not banned.
Thank you.
Yeah, the big point to echo there, and something that we talk about all the time with regulators, is that it is happening right now. It is happening. Us coming into a new country does not create this market for crypto, right? All that we are doing is helping to formalize a very informal market that is already happening and already booming, right? And so in every country across the continent, crypto is right now. I think there's a tendency to talk about crypto as the future. Crypto is happening right now across the continent. And the reality is that you cannot stop it, right? You cannot. China's banned it 6 times, right? You can't stop it, and so it's in everybody's best interest to implement smart regulations that work with exchanges and work with the on and off point between DeFi and then the local economy, right? Because the other thing is that we can talk about DeFi all day, and you can have all your money in NFTs and doggy coin and all of that. But without some ability to actually interface with the local economy, then none of it really helps, right? And so those interfaces, that in between, going from the crypto and DeFi ecosystem into the local economy and back and forth, that's where the regulation should come in, right? And that's where exchanges and other companies, it's our responsibility to work with the regulators to make sure that there are smart regulations that keep everybody safe, right? To make sure that terrorists and sanctioned people and others that should not be able to access this are not able to access it, right? Making sure that there's a reporting system, making sure that when something goes wrong, that we have somebody that we can talk to, right? Those are the things that we try to work through, right? And obviously it's no secret that some countries are a little bit behind when it comes to fintech regulation and especially with crypto regulation. And so I think that's where collaboration with the private sector really comes in. Is let's work together on putting together a reporting regime, right? Let's work together on putting together who do we work with when there is an issue, right? When a customer has a problem, who can they go to, right? And so working with the regulators, I think, is extremely important for any company doing fintech anywhere on the continent, right? It's from the regulatory perspective, it's important that they listen, right? That they try to learn and try to educate themselves on what this technology is, how it actually works, and help implement those regulations to move the industry forward, right? And actually create a space for growth and innovation.
Fantastic, thank you very much. When we talk about in IRA, for example, digital currencies by central banks, we are celebrating it as a success story. But when you really think about it, the world has already experienced that. I mean, go back 100 years ago. I mean, the whole concept of the value of money is like a value you assign to that fiat or paper currency, which was relied or connected to gold. And all of a sudden, regulators decided, no, we're going to change it. And at the time, a lot of people thought that was the end of the world, but it didn't. So the regulators were flexible, and the world has seen that actually you can change a value you assign to money, but the transition to digital currency is not getting that kind of wild acceptance as it were. What has stopped the world to kind of repeat that kind of acceptance when it comes to digital currency?
I wouldn't think about it as a 1 and a 0, a black and a white. It wasn't like we went from gold to fiat, right?
Yeah.
The first form of fiat currency, I think, goes back to like 800 AD or some in China. Basically, one of the kings or the Khan said, "This is my face on the banknote. You don't like it? I'm going to kill you." That was state power. Literally, that's how fiat currency started. I can't remember if it was like 1200 AD or 8. It was like, it wasn't 1970 whenever Bretton Woods fell apart. So over the last several hundred years, money, we've attached money to gold, to silver, to all kinds of precious metals, and many times we've not had a peg like that. Digital money is different. Digital money isn't just about, because the ERMB or the e-Naira, that's digital money, but it's still fiat money. So I think what we're talking about is different here on the panel. We're talking about what I call digital money 2.0. It's tokenizable and it's programmable. It can be linked to fiat, but doesn't have to link to fiat. Because you'll have, I assume most of your money moves around on your internet bank account or MasterCard or PayPal or local equivalents. That's kind of digital money, but it's completely in the fiat system and it's account-based. Whereas what we're talking about is it's tokenized, it's programmable, and it's not a ledger entry. So it's a different type, and that's why it's taking so long, because it's not just about, it's a whole different ballgame. That's why it's taking so long.
Thank you very much, Ronit. Very much appreciated.
I think the other reason that it's taking so long is you're talking about switching. So gold to fiat was switching from essentially a system of equity to debt, right? And now you're talking about going from debt back to equity, right? Right now, 40% of all dollars in circulation, all U.S. dollars in circulation, have been printed within the last 18 months, right? And they're still printing more, right? We have another $1 trillion to print, right? So, Yeah, I mean, you're talking about going from a system where governments are able to freely print money back to a system where Bitcoin cannot be freely printed, right? Crypto cannot be freely printed, right? It has to be. I mean, Bitcoin being the perfect example and sort of the quote unquote gold standard. In order for Bitcoin to be mined, there is a process that involves consumption of energy, that involves consumption of resources, right? And so you can't just turn on the money printer and watch it go, right? And so there's going to be a continuous pushback because you're talking about going from a system that's very very easy to control, right? Very easy to I mean, unfortunately, in a lot of countries manipulate, right? Going back to a system that is more traceable, right? You can't fake how much gold you have in storage, right? Or, well, maybe gold you can, but you can't fake how much Bitcoin you have, right? And so yeah, it's just that switch back from a debt-based currency to an equity-based currency. There's going to be pushback there.
It's simpler than that. It's going from I control it to I don't control it. I mean, why would anyone not find that difficult, right? It's like having kids, right? I control you when you're 3 years old. You're 18. I don't control you. It's really difficult, right? That's why you have teenage years. It's the same thing with money.
That's part of the reason why I don't think that fiat currencies go away, right? And I think that I normally, especially in crypto circles, when I say that, people are oh, but I don't actually think that fiat currencies go away. I think that what crypto does is it changes the way that people.
It's different rails.
Yeah, I think that what crypto actually does is it changes the way that people interact and use the U.S. dollar, right, and sort of global reserves, right. But I tell everybody I still believe it'll be a cold day in hell before I can walk down the street in Lagos and get chicken on a stick with Bitcoin, right. So
well, you could get it, but it's something else. It's like, think about most of us travel to get here, right? So I first took a road. I went on a car on a road from my house to the airport. Then I got on a plane. In some countries, you got on a train. These all exist. Trains, planes, roads, right? There was a time when you had to walk on that road and the Romans built it for us or whatever the story is. And then if you were rich, you had a wagon or a coach, right? And just like we have loads of different ways of transport, money or value transfer is the same. And now we're in that kind of, I don't know if it's the 1830s and the railways have just arrived in sort of the world of Bitcoin or DeFi, but that's kind of what it was. And just like when the railways first arrived in the 1830s in the UK, you had massive bubbles and busts and all kinds of lack of coordination. I grew up in London. Like, if you've ever been to London, have you ever wondered why all the train stations, Sam, are all next to each other, all the big ones? Like, why is St. Pancras next to Euston, there's 3 big ones right next to each other? They're all private companies that built it. And then it got regulated. And in that first 10, 20 years, 95% of those companies went bust. And the limited liability corporation was created effectively to fund these very large CapEx projects. And that's what we're kind of living through right now with DAOs and so on. That's why it's so difficult, transformative, and exciting at the same time.
Fantastic. Thank you so much. That nicely weave into our last question before we ask audience question. What would be the future of money, say, in 5 years, in 10 years?
I think I answered that question already, right?
I think the future is going to be based also on how the Africans are going to gain more access to internet and to affordable smartphones, because we are talking digital. So let's don't forget. So digital means that you need to be connected. This is an intangible asset or currency that we're talking about. So just imagine if the internet disappears, so all this digital world will vanish in a second. Okay, so again, cash is still here, as we said. Cash is still king, and something we can relate, we can touch, we can hide under the pillow. Digital, okay, is digital. So I guess now we are in a high curve, because at least in the countries where, for example, we operate in DRC, we see steady penetration of smartphones and affordability. So again, I think the future looks bright. We have, as we say before, the demographic is helping, the penetration of internet is helping, the affordability of smartphone is helping. So it's gonna be bright. But just don't forget that it's an intangible, asset. So.
That's a really important point. It's an intangible asset built on tangible infrastructure, right? I mean, the number of calls we must have all done talking about how exciting African fintech or crypto is, and then half the people on the Zoom call are basically cutting in, cutting out from various African countries. Doesn't happen from South Africa. Sometimes happens from South Africa as well. But it's like, it's interesting, like, and then we're all having this really excited conversation going, wow, Nigeria is the future, or Egypt's the future, and most of the people don't have a 50-minute Zoom without basically fading in and out. And India was like this a few years ago. It's not right now because a huge amount of capex went in to build the rails, the telecom, the technology, the data rails. So that's what we need to build, and then we can ride on that. Because the population's ready. I think you made a really good point. It's happening now, but the rails aren't built. So maybe Miguel can go and raise lots of capital to fund the rails.
Well, I just hope that that the future of money is in 5 years I can use my Shiba Inu to get a bucket of chicken at KFC. But maybe that's maybe the world's not ready for that. But to echo what both of them said is it is moving more and more digital, right? And I think that the way that people use and interact with their own money is changing. But in order for us to really get there, at some point, it's going to take a mindset shift more than anything, more than a technology shift, more than any of that. Because the switch for somebody from using a bank and having all of their money in a bank to having a digital wallet that they control is that if I screw up and I send money to the wrong person, I don't have anybody to call. I don't have an account manager to yell at to get my money back, right? And so it's. There is certainly a mindset shift that will have to happen in terms of personal responsibility and just people's trust or distrust in centralized organizations and all of that for a lot of this to really take root, right? And so I think realistically the technology is there. I think that to some extent the reach is there as well, right? And that's part of what we're doing. That's Johannesen in Congo is doing a great job with reach and everything, and making this stuff available to people. I think that what we're going to see over the next 5 years is that mindset shift, and people are going to start to come around more to the idea of money being digital, right? And the way that they interact with money and the way that they've interacted with money in the past it's going to be different, right?
Sure. Thank you very much. Just remember me when you go to KFC with Shiba Inu. Just you have my WhatsApp number. Thank you very much for our panelists. Now the floor is open to you if you have any question. We have about 5 minutes. Your Excellency, please.
Thank you very much. Very, very interesting panel. As I spoke, for me, this is an area I fully support. And if you do have those smart regulations, please share with me. Already, the African ICT ministers, we're all together on a group, and we can actually start discussing to see how we can improve the regulation.
Put me right in that group. That sounds great.
But I'm curious. First, you've said that you have zero fees on your, so how do you ensure that what you're doing then is sustainable if your fees are zero? And the second thing is, when now governments are not engaged in these money transfers and so on, and even the businesses, then there are no fees, there are no taxes. It's happening outside of this net. So who's going to pay for this infrastructure? So today, M-Pesa, I think the fees are about $1 billion a year. Not the money transfer, just the fees that they get. And with that, they're able to move even into 5G. They can invest in many different things. So when this service is now in the cloud, it's not touched by any regulator, how do we get fees so that they can pay for that infrastructure that you're asking for? And I can say during this time of COVID, we have seen the resilience of the infrastructure that we have. And so far, so good. Thank you.
Yes, thank you. So the reality is that there's no free lunch, right? And so no, we do not charge fees. The way that the way that the system works, right, is if you're buying Bitcoin, let's say, then you get a different price than if you're selling it, right? And so just like most exchanges, we're making our money on that spread between the buy and the sell rate, right? And then in terms of funding this the infrastructure and building the rails, that is again one of the benefits that this industry is really bringing to the continent right now. Is there is a lot of foreign investment that is looking to fund exactly that, right? And so we're nowhere near as big as M-Pesa, right? We're trying to be the best M-Pesa we can be. We'll get there one day, but there are a ton of foreign investors right now that want to put money into Kenya, that want to put money into, Nigeria and Botswana and to all of these countries, right, to help fund and to help build that infrastructure, right? I mean, to your point earlier, we did just finish up our Series A, and ours is small compared to what Flutterwave and some of these guys are able to bring in, right? And the reason they're able to bring in that money is because there's so much interest right now in doing business in Africa, right? There's so much foreign investment that wants to come in. And so again, to your point, those smart regulations not just encourage innovation on the ground, but also make it a lot easier and a lot more sort of open for that money to start flowing in.
Thank you very much.
If I may add, what we save on commissions is a direct injection in the economy. That's also something to take in consideration. When we calculate, when we can, take 1% of commissions out of remittance, it's immediately an impact on the economy, visible. So this is also something to take in consideration.
Thank you very much, and thank you very much, Your Excellency, for the question. I know we have more questions. Unfortunately, we ran out of time, but I will encourage you to ask these amazing panelists during lunch, during our breakout session. So thank you very much, Johannesen, Ronit, and Chris. Very much appreciated. And thank you for coming.